let's go over the supply and demand for all the commodities I trade, and specifically also how copper is probably going to flip in the coming month, most likely, and how I'm planning to profit from it. So for copper, the supply is overall pretty stable, nothing new there, but the demand is increased due to the possible 50% import tariffs in the US. So the key upcoming events to kind of look at is the August 1st tariff updates. And for now, I will wait and see how the tariff situation unfolds. The tariff will be canceled at some point. That's guaranteed. The question is just when. And when it is announced, there will be a great opportunity to sell calls and enjoy the volatility collapse on copper. It will happen because there's copper in pretty much every single electronic, every single product, and putting import tariffs on it will be just unimaginably expensive for everyone. So I think it's going to be called off sooner than later, and when it happens, great opportunity to sell calls. Price will probably come crashing down, and volatility with it. And we just need to be patient and wait for it. For the graph, obviously copper is all the way up, pretty high up, obviously, and we had this massive day over here on July 8th. For volatility is also pretty high up, and just means that we have a big drop down. So even if we enter after the announcement, we will still have a lot of volatility contraction to enjoy from if we sell a call. For the seasonality, surprisingly enough, it somehow does follow seasonality. It shouldn't, because fundamentals are different now than they were on the average of the last 5 years and the average of the 15 years, which is the blue line. But overall, I'm not paying attention too much to seasonality for copper for now, because the fundamentals are really different from what they were the previous 5 years. For gold and silver, the supply is overall pretty stable, and the safe haven demand is pretty mixed. It's going up and down. It all depends on the August 1st tariff updates and what happens at August 1st, and the events that will lead up to it and past it. So hard to say, but for me, I will probably wait and see how the tariff situation unfolds. For now, it's just too unpredictable. At the same time, gold is moving in a perfect side trend, which is great for me as a strangle seller. But again, I'm holding off. I don't know what's going to happen. It's not an ideal situation where something is coming up and you have no idea how the market will react to it. With silver is a bit different. It's kind of in a nice uptrend, making higher highs. So we'll see as well. For now, obviously, it's out of limits due to the tariffs. But now volatility is really pretty low on gold. If you look at silver, volatility on silver is also pretty much rock bottom. So obviously, I don't want to sell low volatility. Definitely want to sell high volatility. So nothing to look at there. For the seasonality, gold, I don't expect gold and silver, like I don't expect copper to follow seasonality, because all of these products currently are affected by the tariff situation and geopolitical tensions and whatnot. So this is what silver looks like. So nothing that you expect pretty much. According to seasonality, the price of silver should be going sideways. Obviously, it's not right now, so not taking that into account as of right now. Now, natural gas, the supply is pretty great. The gas storages are building up, which is a good thing. There might be some increased demand due to hotter weather in August. Depends. There's a lot of supply, so it might just counter it, and the price will just kind of keep moving sideways. Usually, it moves sideways during this time of the year. The key upcoming events is the weekly natural gas storage report, July 31st, and the average weather forecasts across the U.S. From July 20th to August 1st. Really important to look at these things, because they will directly impact the price of natural gas futures. And for me, it might be a good opportunity if price stays range bound and volatility increases, because the price is still kind of range bound, and I do need price to kind of go up to stay within this little range bound price movement. And at the same time, volatility is pretty low right now. We need volatility probably at 65, 66 for me to be comfortable to open any kind of position on it. According to seasonality, doesn't really follow seasonality as well. It seems price should shoot up according to the 5-year averages, but it doesn't. But obviously, it's fundamentals are a bit different now. We have more supply and less demand. So this is why the price kind of shut down. So I think the price might stabilize, go up. But both the 15 and the 5-year averages indicate that the price should go up at the beginning of August, which is usually the hottest month of the year. So there should be more demand for natural gas. For crude oil, the supply is overall pretty stable, and OPEC is cutting some output. They were adding a lot of barrels per day from month to month, but right now it seems like they're going to be cutting output, and this is because they expect the demand to decrease in the coming months, and this is again according to OPEC as the economy slows down. So we'll see what's going to happen. They have pretty much monthly meetings. They already had one in July. The key upcoming event is the weekly petroleum status report, and how many, what's going on with the storages. And we need to follow the Middle East tensions because they are coming up again. I know it's not really in the news, but I follow this stuff. So for now, crude oil is out of limits at the moment. If there are renewed tensions with Iran, Israel, US, and all this kind of craziness, price is somewhat been moving sideways for the past month in July. Really tight range. So everyone who sold some options, whatever they sold, they probably made money. And at the same time, volatility is absolutely rock bottom. So not an option for me, even if everything else would have been fine. Volatility is all the way down. According to seasonality, it's been following seasonality perfectly. As we can see, the month of July is usually where the price just goes completely sideways on crude oil. Now, we'll see what's going to happen. Again, after August 1st, I'm not opening anything before August 1st. For wheat, the supply is overall stable. Demand is also pretty stable. The key upcoming event for me is the USDA crop progress. It's a weekly report. It says how the crop progress is going on. So this one's going to be on July 28th. And this might be a good opportunity. At the same time, volatility is pretty low. You'll see that the price is moving sideways. Perfect. Exactly what I need, basically, for a position as a strangle. This is actually what I usually open up. But at the same time, like I mentioned, volatility is absolutely rock bottom. It's not something that you can kind of sell options on and expect to do good over the long run. Maybe a trade or two will work out, but overall, it's not really a high probability trade. For the seasonality, the price has been going sideways completely, exactly as it predicted to be. So we'll see in August the price, according to the 5-year line, should also keep going sideways. According to the 15-year line, which is the blue line, the price is supposed to drop. So we'll see. I think it depends on the dynamics. I expect price to kind of keep going sideways for the most part. Soybean is another great product. The supply and the demand are pretty stable. We are looking again to wait for the US crop progress and to see what's going on with the US-China trade deal. So because this might be another good opportunity. However, volatility is low currently, and we need to follow the US-China trade deal because China is the biggest single purchaser of US soybean. So it's really important because China put some tariffs on the US as well, and specifically on soybeans as well. So it can really affect the price of soybeans. It can probably drop the price pretty hard because then there will be not as many sales from the US, and then China will just start buying from other countries like Brazil. Now the price is moving perfectly in a side trend. You can see it's picture perfect, and I actually just closed the position on soybean, a profitable one, really quick one, because volatility went up and then it crashed down. So I opened a position when volatility was somewhere over here. It was on this day, I don't remember. On July 17th, actually. It was a bit higher and it dropped all the way down. So right now volatility is pretty low, not really a good option to open a position. Seasonality predicts the price of soybean perfectly. It's been moving sideways. So there might be a big drop in price. As you can see, it's been happening in the past 15 years and 5 years. And then the price has been moving somewhat sideways for most of the month and increasing towards the end of it. So we'll see if it will follow volatility or follow seasonality. And obviously we have the US-China situation, which might affect or might not affect soybean oil or soybean. So far it hasn't affected it too much, so we'll see. But for now, this is it, and hopefully this was a useful update for you guys, and I'll catch you in the next one.